Devin Choksi, Managing Director of KR Choksi Security, joins us live now. Devin, good morning. Thank you for joining us. Devin, in the last two trading sessions, we've seen some revival and mid-cap stocks have managed to regain some lost ground. Do you think whatever price action we've seen in the last 2 days is no measure of what lies ahead?
Yes, good morning, Nikunj. Well, if one would like to look at, I think, the last few trading days and I think patterns therein. Most of the times, I think we have seen, I think the recovery has happened, I think, with a very thin volume, and that's not, I think, giving very high confidence. But at the same time, if you look at the backdrop of entire month of March, wherein most of the mid-cap stocks, I think, got killed. This was largely because of the selling the positions by the NBFCs, particularly against the funded kind of a situation. And many of the market positions also, because of the collateral damage is happening due to that, got sold off. In such situation, I think the market came down very heavily, and I think the mid-caps became very significant victim of the kind of a situation. I would think that they do not deserve so much of suffering as far as I think the valuations are concerned. And certainly I think mid-caps are definitely looking ahead for going forward. I think the stocks are looking quite alright for the buying into the investment portfolio. My reading says that many of the mid-cap stocks are quoting at a valuation which is far more lucrative than I think their fundamentals are at this point of time, and basically I think one could buy them into the portfolio. So certainly the fall of month of March I think is probably behind us in most of the mid-cap cases. Probably you should be seeing a gradual to smart recovery in many of the mid-cap counters going forward, and that's where I think the market should assume the stability. I would think that in the first half of April, probably Nifty could also head in the direction of somewhere around 5800, 5900 levels, and maybe the downside is protected between 5500 to 5550 levels. So definitely I think the mood is going to be a little bit more better with a short covering led rally taking place in some of the frontline stocks as well.
Devin, morning. Today the focus is going to be on the auto space as well, and in light of the weakness that we saw yesterday itself, this morning there's news backing as well the sentiment. You've seen Tata Motors, extremely disappointing numbers there, double whammy coming in for both PV, MHCV sales. Hero MotoCorp, again disappointing numbers. TVS Motors, again, well below the expectation number as well. It's only M&M which has come in line. Does it seem like some of these auto majors have bottomed out with this month's numbers, and we could see some improvement, or do you think there are months of disappointment coming in the pipeline?
Aisha, good morning. Well, I find that I think in many of the auto numbers, if you look at it on a month-over-month basis, that is from February to March, probably the numbers are not looking as bad. Yes, I agree that I think compared to last year's March and I think the March of 2013, the numbers are certainly on a downside, but the reasons are very well known. To my mind, I would like to now look at, I think, the auto numbers on a monthly basis vis-a-vis the yearly basis, because I think the recovery, if at all, I think one has to see, would probably find, I think, on a monthly basis. Given some amount of discounting to the month of March, wherein the year-end buying may have taken place, I would still think that I think the bottoming out of the auto numbers could probably well be seen. However, having said that, I think I am very conscious about it that in the first quarter of the financial year, that is April to June quarter, probably you might not see the kind of a complete endorsement of this particular viewpoint. You should possibly see, I think, this particular viewpoint getting endorsed once two things happen. One, of course, I think some of the infrastructure projects starts happening, and including some of the mining activity starts happening. That would be the first indication. Along with that, of course, I think you are looking at the fall in the interest rates to revive in the consumer demand in the car segment, which I believe, I think the first indication could come somewhere in July to September quarter and more thereafter. So certainly, I think the bottoming out process may take place, I think, in coming months. I don't think that I think we are going to see too much worse, I think, from current level. Maybe I think some recovery here and there, but I think the larger recovery should be seen somewhere in the second half of the financial year 13-14.
Devin, for this calendar year so far, foreign institutional investors have pumped in about $12 billion. That's a record number. But despite record inflows, Indian markets are down by about 4% approximately this year. Is that a concern that one side you've got a wall of liquidity and that wall of liquidity is no longer doing the trick for us?
Nikunj, when I analyze this liquidity, I think I find quite a disturbing picture actually. I think this liquidity is largely coming into the market for playing on the currency side. Basically, I think at 54, 55 levels, I think they are more keen to bring in dollar as much as possible, because going forward when the rupee starts appreciating, I think they want to gain on that front. And given that kind of a mood, probably they are not putting this money into long-term investment ideas. Largely the amount of money getting deployed into the markets and the system is for short-term positional calls. So many of the large funds which have come up into these markets, I think they're playing around in the market. As a result of which, what you notice is right, that market has actually gone down, because I think in a sequence they would probably play with some of the stocks, and I think in some of the cases you will find 10, 20, 30% kind of an upside in no period of time. And likewise, I think in some of the stocks where they become victim and they go down so badly. So that's where I think they're trading around. According to me, I think this game is probably, I think, requiring some more amount of seriousness. Regulators along with, I think, must look at this particular aspect, whether we can attract long-term money into this market vis-a-vis the short-term money which are creating havoc into the confidence also of the investors. So maybe one will have to look at this particular aspect from that angle. Money coming in, definitely good. But money going for the long-term investment, answer is no at this point of time. It should come in, and that's where I think you should see the recovery thereafter.
Even the oil sector reforms have kicked in, and we've seen 3 back-to-back increases in diesel prices. Stocks like HPCL, BPCL and IOC are really under pressure of late. Why is that?
Yeah, Nikunj, I think this view is being again validated, that even though the oil prices are increasing, the petrol product prices are increasing, probably the OMCs will not do anything great from here onwards. The fact that I think the refining margin and the distribution margins are not going to be expanding dramatically, it can only help these companies to an extent, I think, that they can recover their money in time, and that could be, I think, a good thing. But otherwise, beyond that, I think these companies don't have much of a headroom or expansion for the profits to grow from current levels. Maybe financial engineering could help them grow their balance sheet on a cash flow side, but not on the profit numbers. So that is where I think our all eyes and the focus is remaining largely onto the upstream companies like ONGC, Oil India for that matter, or even I think in private sector companies like Kane. I think that's where I think we largely believe that I think you should have more opportunities going forward vis-a-vis into the private sector, pure public sector OMC companies.
Deven, Infosys numbers are due on 12th of April, which is now less than 15 days away. Last time Infosys surprised everyone on the upside. Do you think this time around they could disappoint everyone on the downside? Because on 12th of April, not only they will share their Q1 outlook, they will also allude to their FY13 guidance.
Yes, Nikunj, I think there are 2 aspects to it. I think one is the quarterly result and second is the outlook. As far as the quarterly results concerned, according to me, I think it is not going to change beyond a point based on the guidance that the company has given. So I don't think that the market has given the price up to this particular stock based on the quarterly results of March. But certainly I think for FY13-14, I think the guidance is more important, and that's where I think the US economy and the progress in US economy will play a major role. So 2 factors there. One, of course, I think the organic growth happening through the US economy's stability, and most importantly, I think some announcement or direction going forward as far as the inorganic growth or the acquisition targets that the company may have thought about. On these 2 aspects, I think the stock could possibly have some amount of headroom. As of now, I believe that the valuation wise it has reached, I think, fairly good scale. Unless it gives the kind of a growth numbers which are in absolute numbers, I think excess of around 15% or so, I think the stock probably may not perform as one could probably expect it. So certainly growth would determine whether the stock price will go up or not. As of now, I think we stay muted on giving any price projection to this particular counter.
Even again, the cabinet meet today is expected to take up sugar decontrol. Does it seem like it perhaps could be a reality today, or again it's going to be all talk, no action?
Well, even if I think it happens, I think I would say, I think the policy measure, yes, I think the market would remain happy. But on the ground situation, if you start looking at it, I think the sugar is having a plenty of stock at this point of time into the go down. Probably I think it may not allow the stock price of the raw sugar to go up. And that's where I think one is not going to see the profit numbers changing for many of the companies. Yes, I think on the policy front, I think there would be a breather. So I think it will be all more of a game, I think, where we will have to see what exactly the decision comes out, whether they take it today or later on. But I think sugar decontrol will eventually happen. I think one will have to see whether it happens before the election now.